Yeah, I think gold's a waste of time. It's dead money. Maybe it's virtue signaling if you're buying it. Gold broke down, as a reserve asset before World War One.
Saylor begins by dissecting the common perceptions surrounding Bitcoin. He contrasts the notion of Bitcoin as a digital currency with its alternative characterization as digital gold. Traditional views often equate Bitcoin with fiat currencies, leading to skepticism and resistance from established institutions. However, Saylor argues that framing Bitcoin as digital gold offers a more nuanced perspective, one that transcends the limitations of traditional monetary systems. Digital gold represents a paradigm shift in the conception of value storage, drawing parallels with physical gold while leveraging the unique properties of blockchain technology. Saylor challenges the efficacy of gold as a reserve asset, highlighting its inherent flaws in terms of accessibility, inflationary tendencies, and historical precedents of collapse. In contrast, Bitcoin emerges as a superior alternative, offering unparalleled security, divisibility, and portability.
If I say to you, well, do you like Bitcoin? And you think, oh, Bitcoin, the digital currency? Well, then you might very well answer like, a certain politician answered a few years ago, like, no, I like the dollar better. Okay, because you thought the Bitcoin was competing with the dollar and you thought someone was asking you whether we're going to replace the dollar with Bitcoin. So if you think it's digital currency and you think the euro, the yen, the dollar are currency, then the implication is, well, we're just going to replace the currency of your nation, whether it's the dollar, the euro, or the yen, or the CNY. We're going to replace it with Bitcoin. Now you end up with the entire establishment, every establishment politician, most bankers, most traditional economists pushing back and resisting it. And the politicians will resist it because nobody wants to collapse the dollar. It's a source of American strength. It's probably worth trillions of dollars a year to the US. So obviously we know why we like that if you're an American politician. On the other hand, if you're a classically trained economist, you say, oh, well, the dollar, it needs to be stable and we need to be able to inflate the currency supply and everything's priced in dollars. And so that's a reason for classical economists to dislike it and criticize it. And if you're an accountant, you would say, well, it turns out that every major corporation in the world has accounting systems, SAP, Oracle. They've spent more money in those accounting systems than almost anything else. I mean, a lot of big companies have spent billions and billions of dollars on accounting systems. They're all wired in euros and dollars and yen and CNY. And if you, as CEO, came along and said, hey, we're just going to replace our US dollar-based accounting systems with another system, the board of directors would fire you. The entire finance department would quit. All your shareholders would walk away from the stock. Probably your accountants would withdraw noisily, and your company would collapse. So that doesn't work. So you can see how simply by choosing the word digital currency, I will get a negative pushback reaction. Now, if I roll the word to digital gold, well, a lot of times you go to 1,000 rich families and you say, hey, do you like Bitcoin? It's digital gold. And they say, oh, well, that's interesting. I don't own any gold. Okay, name me one billionaire that ever made $1 billion investing in gold. There isn't any. I can't name a single billionaire that will attest to actually owning $1 billion of gold. Yeah, I think gold's a waste of time. It's dead money. Maybe it's virtue signaling if you're buying it. Gold broke down, as a reserve asset before World War One. And, on the eve of World War One, when all these nations declared war, every single one of them went off the gold standard, And so there's a myth of a gold standard that people like to cling to, but I've read like 3,000 years of economic history.
Mm-hmm.
And as far as I can see, it was never as good as anybody ever thought it was. It's always been defective. The real elephant in the room here is two things. Gold doesn't work in time, and gold doesn't work in space. If you look at using gold as a property asset, a reserve asset, a treasury asset in space, there's no way for 1,000 different organizations to custody their gold and swap it every week and settle it. You can't settle every day. You can't settle every week. You can't even custody it. right? So gold centralizes. I mean, how is it possible that, the United States could seize the Russians' gold, right? Like, because, the gold standard, collapsed, or the faux gold standard after Bretton Woods collapsed, I guess, when the French wanted their gold back. But, if you wanted it to be an effective treasury asset in space, you would need to allow peer-to-peer settlement. And that means, how do you have, and when I talk about peers, I'm just going to talk about Apple, Google, JP Morgan, Citigroup, Bank of Japan, Bank of Switzerland. How about the 10,000 biggest economic entities in the world? They all need to be able to custody and swap it every month for it to be stable as a settlement network. And of course, gold isn't that. You can't sell it every day. It doesn't move fast enough. And so that's why it fails versus Bitcoin. With Bitcoin, you could have 10,000 different custodians, and they could be settling $100 million between each one, or $1 billion between each one every day, and the network will hold that kind of load. So gold doesn't work in space, but it also doesn't work in time. Gold has under best of circumstances, a 2% inflation rate. That's steady state. And a 2% inflation rate of gold means a half-life of 30 years, which means that 87 or 88% of your economic wealth is dissipated over 100 years, right? And if you look at Spain in the 16th century, in the 100 years after they discovered America, and they looted the Aztecs and the Incas and everybody else of their gold, they also created 500% inflation. Right. And so they actually hyperinflated their currency in gold coin, collapsed their own empire. And so and the stories are the same about Julius Caesar. When he went off into Gaul and he conquered Gaul, he brought back so much gold, he created hyperinflation in Rome. And that was part of the reason for the civil wars that followed. And you know what they did to Julius Caesar when he came back?
Yeah.
So gold is inflationary. The difference between 2% and 0% is the difference between a half-life of 30 years and a half-life of a million billion years, right? And so there you go. Bitcoin is the fix on gold. Gold itself is just a defective treasury asset because it's too slow and it's too inflationary.
Building upon the analogy of digital gold, Saylor introduces the concept of Bitcoin as digital capital, a transformative force poised to reshape the global financial landscape. Unlike traditional assets such as real estate or equities, Bitcoin transcends physical constraints and offers unparalleled liquidity. Its fungibility and divisibility make it an ideal instrument for corporations seeking to optimize their capital allocation strategies. Saylor emphasizes the pivotal role of Bitcoin in the evolution of capital markets, envisioning a future where corporations integrate digital assets into their balance sheets as a means of enhancing liquidity and preserving value. By harnessing the power of Bitcoin as digital capital, companies can navigate volatile market conditions with greater agility and resilience.
So traditional investors will use alt assets, equity, or real estate type portfolios, and then occasionally, if they're lucky, they get collectibles, Picassos, or the jets, right? And then the new investors, the 21st century digital investor, will look and they'll add Bitcoin into that mix. And, obviously, I happen to believe Bitcoin is by far the best form of property, and it's obviously the best form of digital property. And I happen to believe that the best way to think of it is a capital asset. So I view it as digital capital. It's going to reshape the capital markets. And why is it a little bit better than property? Property evokes $1 billion or $100 million digital warehouse or digital building, but most people don't think that they can decompose and teleport their buildings. But capital, like treasury assets, they need to be liquid. And so if I have $1 billion on my balance sheet and I can liquidate 1% of it a day, and if I can buy $1 million more worth of property or sell $8 million worth of property, as a corporation, I can use Bitcoin as a capital asset. It's very difficult for a corporation to use 4 buildings as a capital asset. I mean, other than, I guess, you would refinance the building, and you would adjust your debt load on the building, and you would be using the dollar, right, as your liquidity there. This last week, you saw Block announce that they're going to start buying Bitcoin every month. You've seen accretion of Bitcoin by a lot of Bitcoin miners. A lot of them are actually not selling as much Bitcoin as they're mining now. I think you're going to see more Bitcoin miners buying more. I think you're going to see more Bitcoin exchanges buying more. I think you see the existing ETFs accumulating, but now we're up to 22 spot ETFs in the world, and they're all in a marketing war with each other, and so they're going to go harder. So I think, and at some point you're going to see these Russell 1000 companies, right? Which one of them wants to crawl out of their zombie state? It's like you're just waiting for someone to decide they want the money. So I think that when they do that, they drive up the price of Bitcoin, and I have to chase it. My first Bitcoins were below 10,000, and and I'm buying Bitcoin in the 60s now, and that's okay. I don't know where we'll get to. I know we'll get more. We'll accrete from here. We will acquire more Bitcoin than we have right now, and we'll do it via organic cash and via debt, especially convertible debt, and we'll do it via equity, and that'll be a function of capital markets and all sorts of other dynamics. I think that the people that are the obvious beneficiaries that hopefully are listening to this podcast would be shareholders, officers, and directors of the 10,000 small, mid-sized companies, especially publicly traded companies, which in essence can't outperform the Magnificent Seven. If you don't think you can outperform Google and Meta and Microsoft and Nvidia, and you have some money, you either take the cash and buy Bitcoin, you issue equity and buy Bitcoin, or you issue debt, either senior debt, or even better, you issue convertible debt, convertible to your equity, and you buy Bitcoin, because that allows you to recapitalize with an appreciating asset, as opposed to decapitalize and have nothing, or to hold capital in a depreciating asset that is kind of has got a negative real yield and burning shareholder value.
As Saylor elucidates, the adoption of Bitcoin as digital capital carries profound implications for investors and corporations alike. Traditional investment strategies predicated on fiat currencies and conventional assets may prove inadequate in the face of accelerating digitalization and macroeconomic uncertainty. For shareholders, officers, and directors of companies across various sectors, embracing Bitcoin as a strategic asset presents a compelling opportunity to unlock value and fortify balance sheets. Whether through organic cash accumulation, debt financing, or equity issuance, corporations can leverage Bitcoin to augment their financial resilience and position themselves for long-term growth. Please like and subscribe my channel.